Hello everyone, thank you for joining us this Saturday morning. And today I want to talk to you and actually teach you how to quickly identify the overall trend. Now we all know from the beginning of trading that you should always be in sync with the trend. The phrase goes, the trend is your friend. But everyone has a different idea and is taught a different way in which to identify the trend. I'm going to show you today the simplest and easiest way to do it, and you're going to be able to start doing it as early as today. But before we begin, I want to start out this Saturday morning by giving you some facts. Maybe they'll wake you up a little bit, because the facts state that 80% of all traders will eventually lose money. Now, I don't mean that you'll go into a series of drawdowns or losses. 80% of all traders will lose everything. The facts also state that 15% of all traders will break even. That's not that bad. Basically, you're not losing anything, but for all your hard work and especially the money you put in, you're basically just treading water. So ultimately, this means that only 5% of all traders are consistently profitable. Now, if you want to see what that looks like on a pie chart, imagine this large section in red here represents the amount of traders who will ultimately become losers, and within the first year. That blue slice represents the amount of traders, percentage of traders that will break even, and that small green slice there represents the percentage of traders that will ultimately and consistently be profitable. Now you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, I've been trading long enough to know that there are enough profits to go around for everyone. It isn't a certain amount of profits on a daily basis that are captured, and then once they're captured or once they're taken, that's all there is for the remainder of the day. Profits are like a huge pie in the sky, enough for anyone to take them. But why is it that only a small percentage of traders are able to capture those profits? Well, it's actually simple. It's simpler than it seems. These traders, whether they know it or not, are consistently on the right side of the market. I mean, think of it. When you are not on the right side of the market, you're basically swimming upstream. You're going against what the market wants to do. You should be in sync with the market and only doing what the market wants to do. It's really simple. But if you're losing, most of the time is because you're on the wrong side of the market. Now, let me share with you an older example here. This is the spiders, the ETF that represents the S&P 500. Someone looking at this would naturally say, well, yeah, we're in a nice uptrend here. I should be buying, right? Because we're steadily going up, higher highs, higher lows, right? So the trend is up, Steve. I don't need some special tool or some special algorithm to tell me what to do. And then this happens, right? All of a sudden, the trend is kind of more choppy, and you're thinking like, wow, this doesn't feel the same. Going up, going down, going up, going down. But then you go to some chat room, or maybe you take that $10,000 class and they say, this is just a wave 4. Wave 5, we're going to go all the way back up. This is just a pausing period. So you buy more on those little so-called bottoms there, thinking that we're really going to take off, and then hoping that's major support. Ultimately, this happens, right? So what happened to the support? What happened to that wave 4? What happened to that Fibonacci level? It all goes out the window, right? So now you sell all your position, you've lost a lot of money, and if you're going to do anything, you say, well, I'm going to just go short, because obviously the market's in a free fall. And then this happens, right? Well, don't worry. There is a way, not to guarantee that you'll get in at the bottom and out at the top, but there is a way to be in sync, and you actually have access to that tool right now in front of you. So what if there was a tool that automatically could put you on the right side of the market? And there is, and I'll share that with you today. So once again, you'll be able to start applying it once we conclude this presentation. Now, if you want to make it even simpler, you can apply this with our PTS Primo Charting platform. All these slides and education I'm going to be sharing with you today are examples of what you can do on our platform. This is the educational platform that actually teaches you how to be on the right side of the market. So welcome. Thanks for taking time out of your Saturday. This is going to be a great educational presentation. My name is Steven Primo, President and Founder of Specialist Trading. And if you're new to my Saturday webinars, we are all about educating you, free education, because there, as I said earlier, there are enough profits to go around for everyone. It isn't a zero-sum game where that's it, we've achieved all the profits for today. You've got to come back where the market is closed. There's nothing you can do. There's enough going around. It's a never-ending source of profits. If you know how to be in sync with the market, you'll be able to capture those. Now, how do I know? Well, I've been trading for over 4 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and out of those years, I was a specialist. A specialist is someone who made markets in roughly about 50 or 60 stocks. So I made markets during the crash of 1987 and the bull market that followed. So I've seen and traded just about everything you can imagine, every system, every trading technique. So in my over 4 decades of experience, I know what works in terms of consistency, and I know what doesn't work. So why waste your time, energy, and most importantly, your hard-earned money searching for that holy grail when, trust me, it doesn't exist. What the holy grail really is sound fundamental education so that you can make your own trading decisions. And guess what? That's what we provide at Specialist Trading and at my sister site, Pro Trader Strategies. You'll see today how much attention we give into trying to teach you all of our techniques and ways in which to elevate your trading. Now, before we begin today's class, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this tool to identify the overall trend, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. And also, if you haven't done so already, please feel free to follow us on Twitter. As I stated, we're an educational company, so it's a lot of free and great educational things on a daily basis that I post. Anywhere from signals our strategies have generated to actual little bits of wisdom, financial wisdom along the way. So feel free to follow us on Twitter. Okay, so once again, as I stated in the opening statements, we are different from other webinars or other classes you may have attended in the past in the fact that we are strictly about educating you. Sure, we'd love you to become students of ours and members, but if that isn't your cup of tea, we always want to leave you with something to elevate your trading for free. We are a free educational webinar class, and we give these series just to show you our dedication to trying to educate you. And that's what I'm going to try to do today. And I'd like to start off, firstly, by sharing with you what my mentors taught me, because it really boils down to this. As I stated earlier, being consistently out of sync with the market is the root of all your losses. Okay? Think of that. When you lose, when you buy and the market goes lower, it's because the market wants to go lower and you're out of sync. You're fighting it. When you sell and the market goes higher, it's because the market wants to go higher and you're out of sync. You're trying to fight it. You're swimming upstream. You're trying to battle the market when the market is actually your best friend. There's no fight to happen with the market. There's no battle. And think of the words you use on a daily basis. I got killed today. Oh, the market beat me up. You're identifying the market as if it's an enemy, if it's a foe of yours, when it's not. It's the best friend you have. The only trouble is we don't know how to be in sync with our best friend. We're always trained to fight it. Think of all the courses, all the classes you've taken. You're always trained to pick the top or pick the bottom when that really doesn't exist. Sure, every once in a while you may get it, but over time, if you continue to trade that way, you'll wind up in that 80 percentile. And that's our goal at Specialist Trading. We want you to become a part of that 5 percentile that is consistently generating profits. So, what if there were a tool that was automatically designed to put you on the right side of the market? Well, the good news is there is. It's called the buy-sell line. Now, before you think that this is, all right, some sales gimmick where now I have to spend $500 or $1,000 in order to buy this. Okay, Steve, you got me now. You sucked me in, and now I got to purchase your proprietary indicator. No, this is free. In fact, you have access to the buy-sell line right now. The buy-sell line is simply the 50-period simple moving average. We call it the buy-sell line because it's going to determine whether you should be looking at the market from a buyer's perspective or from a seller's perspective. That's why we call it the buy-sell line. But in order to use the buy-sell line properly, you actually have to ask yourself a question prior to every time you apply it. Now remember, it does not matter what strategy, what technique you use. It could be based off fundamental news. It could be one of my methods. It could be based off the full moon. It makes no difference what the decision-making process is for you to decide to buy or sell. But once you get a signal before you pull the trigger, before you enter the order, ask yourself this question: where is price in relation to the buy-sell line? This is so important, this question, that I would recommend copying it down and on a post-it and putting it on your screen. Because you should always ask yourself, where is price in relation to the buy-sell line? Now, you can only come up with two possible answers, because if price is above, then you should only have a buyer's bias. Okay? That's it. That means you will only be looking for buy setups. In other words, if your strategy generates a buy signal, ask yourself, is this buy signal where I should be entering, is it above the 50? If it is, go ahead. You're going to have a higher level of consistency. Now, if price is below, then you should only have a seller's bias. So if you get a buy signal, but all of a sudden you plot the 50 and it's below, the odds are against you of that trade succeeding. Notice I didn't say the odds are guaranteed that you will not succeed. No, every once in a while you'll have a nice trade. Remember though, we're trying to make you a consistent trader. Consistency means 2 steps forward, 1 step back, where you have a nice upward slope in your profit and loss. We don't want you to have this one great trade where you make tons of money and then 5 or 6 trades where you lose everything, right? Sound familiar? That's not a consistent trader. That's what you'll get when you're out of sync with the buy-sell line. So remember, if price is above, you should only have a buyer's bias and be looking for buy setups. If price is below, you should only have a seller's bias and look for sell setups. Now, let's go back to that original example we talked about in the spiders, okay? We had the straight up market, straight down, and then back up again. How could the buy-sell line have helped us? Remember, I say helped. I didn't say guarantee, but at least give us a better idea. Well, all you have to do is apply the 50-period moving average. And as you can see here, while we're above, we're well above, and then when we get consecutive closes below, that's our signal to now be negative. Now, sure, we had one close above, not enough for us to be positive, and so we continue to go lower. Now remember, this is not designed to get you in at the bottom and out at the top. So we had to wait up until this point right here, but you could have recouped everything you lost on this point up and gone long somewhere around here. The main thing I want to stress to you is this is a tool designed to be on the right side of the market. It's not a trading setup. In other words, once price closes above or below the 50 period, I'm not telling you to simply buy or sell at the market. That's not what this is. This is not a strategy. It's not a system. It's just a prerequisite to defining whether you should be buying or selling. All right, let's look at some older examples. I'm going to share with you a lot of older charts here. This is just so you can understand the process. This doesn't matter what time these charts were generated. You have to understand the process. But later on in today's presentation, I'll show you charts that were updated as recent as yesterday, okay? All right, so let's look at a monthly chart, older chart of the spiders. Someone looking at this would say, gosh, this thing went straight up. I wish I would have known that I should have been buying this whole time. Well, actually, you could have. All you had to do is apply the 50-period moving average, and you knew well back in advance, in 2011, because price was above the 50. Sure, we had one close below, but then one right back up. So that's not enough to tell us we have consecutive closes below. So you knew this entire time, since 2011, you should be long the spiders on a monthly time frame. DVN, all right, looking back in hindsight, we say, wow, I sure wish I would have known this thing was going lower. Well, we don't know how low something will go. No one does. I don't care what someone tells you where the perfect exit or perfect buy point is. No one knows with accuracy how low or how high something is going. All we want to do is be in sync. That's all we want to do. And if you apply the 50, we knew well in advance right here that we had consecutive closes below and that we should only be a seller. Even on these rallies, you should be looking at these as shorting opportunities or chances to get out. Every time we bounced, that was a chance to get out, not a chance that we had bottomed out. Another example here. Every time it looked like we were going to bounce, you could have got sucked in, gone to that chat room, or heard that guy on TV say, well, it looks like we bottomed. Here's where the support is from the major institutions. They're all buying here, and see, it's been validated. We're going higher. But look what happened weeks later. We're making lower lows, okay? If you had the 50-period moving average, you knew well in advance not to buy anything, that these bounces should be looked at as selling opportunities, not buying opportunities. Now, here's an example of where sometimes it's a little bit difficult to identify the trend. As we see here in this older example of CREE, the market appears to be going sideways. Not enough information really to give us an idea. Well, once we add the 50, we actually see that for the first portion of this chart, we were below the 50. So we should only be looking for sell signals. Remember, we're not going to sell at the market. This is not a strategy. It's not a system. It's just telling us what bias we should have. Okay? So we've known up until this time that we should have a seller's bias. But what happens right here? We start to have consecutive closes above. 1, 2, 3, 4, 5 closes above. So here's the rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. Remember, just one close above does not give you, the identification process of saying, wow, well, Steve said we close above, so I guess I should look for buy setups. No, you need at least 3 to 5. The more, the better, okay? So as we go back to the chart, we see here that we had multiple closes, a total of 5 closes above. So at this point, even though it appeared that the stock was basically going nowhere, what is the market? Not some guy in a chat room, not some guy on TV, not even some guy in a webinar that you hear on a Saturday morning. What is the market telling you? It's telling you that the overall trend is now shifted to up and that you should only be viewing CREE from a buyer's perspective. And look what happened, okay? This is where traders usually see this happen weeks later and say, gosh, I wish I had known this was going up. But once you've, been provided the information and the knowledge and the education, you don't have to subscribe to that, chat room. You don't have to spend $10,000 on some course that doesn't make any sense. You don't have to wait with bated breath for the earnings. You'll know in advance whether you should have a buyer's or a seller's perspective. Remember, that's our goal. We're simply trying to educate you. You have to make your own decisions. All right, let's look at this example in MRK because remember, I've stated this is not guaranteed to make you money. This is just trying to give you a higher level of consistency. We're trying to put the odds in your favor. Nothing is guaranteed that you'll never lose. For example, right here in Merck, this older example, we see here that we had consecutive closes above, a total of 5 closes. So let's say your strategy had you generating a buy signal on this breakout to the upside. So let's say you got long. Well, for a week or so, you're looking pretty good, but then look what happens. Now, we still haven't gone below the buy-sell line, so the trend, for all intents and purposes, is still up. But you're sitting there with a loss. Maybe you got stopped out with a loss, and you're saying, boy, this stuff doesn't work. Remember, it's not guaranteed to always make money. It's just guaranteed to help you. So let's say you had a small minor loss here, all right? Or maybe even you were still holding on to the position, hoping that it was going to turn around because it's still above the buy-sell line. But look what happens here. We start to flirt with this buy-sell line, and actually we have a number of closes below. We have a total of 9 closes. Now, where someone would say, well, this is major support. Look where we're holding right here. I'm going to buy more. I'll double up my position. And this way, once we bounce back up to these old highs, I'll even make more money. This is the way most traders think. All right, they've been told that this is major support. This is where all the institutions are buying. This is where the volume has picked up. This is a major Fibonacci support. All these outside sources that aren't listening to the main thing, which is the market. And what's the market telling you? Well, it's not only telling you, it's screaming that it wants to go lower, that the overall trend is down because it is below the 50-period moving average. If you are not out of this position by now, you should run to get out. Because look what happened. The stock fell 8 points in the next week. You had plenty of time to get out. But once again, traders love to play the victim game. They love to sit there and go, boy, how did I know that news was going to come out? Or how did I know the market was going to fall out of bed? Or gosh, I was right. That was major support. But, that news that came out or that downward recommendation really hurt me. Now I'm really stuck with it. Traders love to make excuses and take themselves out of the game. Once you have the knowledge, once you have the education, you never have to play that victim game. You're responsible for your profits and your losses, no one else. Okay, I know a lot of you say, well, this is just too simple. I mean, Steve, the 50-period moving average, I can start using this on Monday. It doesn't really seem that it can really help me. Well, if it's not your cup of tea, I understand. I've been using this tool for over 4 decades now. In fact, I use it every day. And I've told my students in my courses, if I was stranded on a desert island and I could only be able to use one tool, it would be this. This is the tool I would be using. But let me show you how important this is, all right? Let's look at an OLA chart here of the Dow, okay? Now, as we see, the Dow had a really nice run up. It was doing very well. Actually, this is the index, the Dow index. And now we start to fall into some trouble, but we're coming down to support. And it looks like we're going to be okay. We'll bounce up. Once again, this could be the wave 4 of an Elliott wave pattern. Now, it looks familiar, right? Only trouble is, this is October 1987, all right? I know a lot of you perhaps weren't even born then. Well, I was on the floor of the Pacific Stock Exchange trading at that time. Look what happened by simply using this tool. The whole time the market was rising in 1987, it was above the 50. But right here, we start having some trouble. This is the market giving us a red flag, a warning sign. Once you see markets, whether it's a 5-minute time frame or a weekly or a monthly, oscillating above and below, that's the market telling you that it's in an indecision phase. It doesn't know what it wants to do. So if the market hasn't made up its mind yet, most likely you shouldn't be in the market. Or if you're already in, maybe you want to raise your stop or maybe sell a portion of your position. This isn't the time, though, to start taking new positions or to start really having a strong idea. As we see here, we had a couple of closes below, and then we went back up. And then we had more closes below, and then we went back up for 1 or 2 closes, right down below again, 3 closes, and then 3 more below. This was an extremely big red flag in October of 1987. And then we all know what happened. The crash of 87 happened, and that would have been comparable to a one-day market drop of 400 points. I don't want you to think that the crash of 87 was starting here and ending here. This is the crash of 87. This is Black Monday. Look at the 2 weeks prior to that. So this would have been comparable to 4,000. You also would have lost roughly about 4,000 points today in the 2 weeks prior. So roughly in that short 2 or 3 week time period, that's about $8,000 comparable to today, a loss in the markets. Do you think the buy-sell line could have helped you, or at least given you an early warning to maybe move your stop-ups or exit a portion of your position? Let's look at another OLA chart here. Here's a weekly chart to show you that this is going to be applied to any market, any time frame in the spiders. Spiders are the ETF that represents the S&P index, okay? Now, this is a weekly chart with the 50-period moving average applied, all right? Looks familiar, right? The only trouble is, if we look at the date, this is January of 2008, all right, going back 11 years. Now, same process happened. We're doing well because we're above the 50. We start to oscillate or touch it, and then we start to close below, 1 or 2 closes above, a lot more below, all right? This is another red flag coming from the market, not from some institution, not from some guru on TV. The market is telling you that, it's indecision. You may want to exit your positions. You may want to think twice about buying things, or you may want to, even if you're more aggressive, start looking for shorts. That would have been a great idea because this was the beginning of the 2008 financial crisis, okay? The simple tool could have helped you. Let's go to last year. Remember the really big sell-off we had at the end of 2018, all right? Same process again. The 50-period moving average, we're well above, all right? Now we have 1, 2, 3 closes above. Now, this is not telling us to go short, but this is just telling us, hey, maybe the market may be wanting to change gears here. So right there, that was your warning. And you should be taking action. If you're thinking about buying, maybe hold off. If you're already in the market, maybe sell a portion of your position or maybe raise your stop. It's up to you. You're in charge, not us. We're not an advisory service. We're just educating you things that can help you. The Dow fell 4,600 points in the next 3 months coming into January of 2019. Okay? Think this could have helped you? Now, I want you to go back and do your own research. Go back and look at your last 10 to 20 trades, whatever market, whatever time frame. I don't care if you trade currency pairs. I don't care if you trade tick charts of the E-mini. I don't care if you trade Bitcoin. It makes absolutely no difference. But I can almost guarantee you that your losses were due to the fact that you were out of sync with the buy-sell line. Okay? Now, go back and do the research. I'm almost guaranteeing you that that's where a lot of your inconsistency comes from. Now, here's what I want to do. We've showed you old charts just so you can understand the process, just so you can see how simple this is. Now, as you look at our disclaimer, I'm going to toggle onto the PTS Primo Charting platform. Everything you just saw were examples represented on a PowerPoint slides of our platform. Now I'm going to show you our platform live and some instances of actual stocks and markets that happened coming into this past week. And if you have a couple of charts that you're interested in me looking at, we can look at those as well. On top of this, I'm not only going to show you the buy-sell line, I'm going to show you how you can kick it into overdrive by using another feature that we have that's only available on our platform, okay? So, once again, I'm going to show you a lot of performance results right now with current charts, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And also, please remember that these examples I'm about to share with you are strictly for educational purposes only. All right, so here we are. Here is an example in Microsoft, okay? As you can see, this is our platform. Here is Microsoft coming up until the 26th, which was yesterday in July. All right, we're going back up until middle of April, beginning of May. At this point, it looked as if Microsoft was doing nothing, right? And then all of a sudden, it's continued to go higher and higher since the beginning of June. Is there any way this tool could have helped us? This is how we make trading so simple and education so simple on our platform, because Pro Trader Strategies and myself specifically designed it for traders. It makes no difference if you're trading 30 years or 30 minutes, just specifically designed it to make it simple for you, to make the educational and trading process simple. The first thing you want to do is come up here in our green strategy tab to the up left. As you can see, here's my cursor up to the top here where it highlights the buy-sell line. Click that on and you'll see our drop-down menu. Let's click on the 50-period moving average, all right? Now, does it come into focus a little bit better? Before, it looked as if we were going sideways. But actually, this entire time, the market was telling us that even though you have sell-offs, these are buying opportunities. Now, sure, you had a total of 2 closes below the 50 period right here. Not enough to go negative to think that we're in a seller's bias. And look what happened right away, right back up. So every time we had a sell-off, that was a buying opportunity. Another sell-off, another buying opportunity. Now, I want to show you a way to bring it even more into focus. Better perspective. This is a feature that you'll only find available and that we've had rave reviews around the world because we have students using this in over 115 countries and in every state in the United States. And this is called our fluid feature. All you have to do is come down here, click on fluid, and look what happens. It automatically changes the back of the screen, where the blue portion is when price is above the 50-period moving average. The red portion is when price is below. So you have the blue buy zone and the red-orange sell zone. So now it makes it simple. So now you just have to reference it by the color. This is how easy trading can be. And so you see now that as long as you're in the blue zone, regardless of how Microsoft looks, you should only have a buyer's bias, okay? This will get you on the right side of the market. Remember, half the battle is just being on the right side of the market. That's why these traders are in the upper 5%, while they're able to consistently generate profits, is because they're only buying when they should be buying and selling when they should be selling. All right, let's look at another stock here, MANH, okay? We're just typing it in, and as we hit apply, we see here that the same process. It appeared for 3 to 4 months that this stock was going sideways, right? But if you had applied the fluid feature, you knew that even though it was going sideways, it was above and in the buy zone the entire time. And then look what happened. This last week, it took off. Now, once again, most traders love to play the victim game, and they love to say, gosh, I was looking at that stock, but it looked like it was doing nothing, and I thought it was kind of rolling over because it was going sideways. I always was taught that you never get involved in a sideways market, that's very negative. I mean, that's silly. This is why most traders miss these moves, because they're overthinking. Trading is really simple. It's the trader that makes it more difficult than it has to be. So once you know that you've been in the blue buy zone this entire time, you only look for buying opportunities. It makes no difference. Remember, I don't care if you use my strategy. I don't care if you use one of yours, someone else that you purchase. But if you use this simple tool, you'll have a higher level of consistency. Let's punch in another stock on the other side of the coin. Let's look at IRBT. Okay. Now, look how this could have helped us. Obviously, in April, we were above in the buyer zone, but then some news or something happened where we we're automatically thrust into the seller's zone. Now, where most traders would say, well, gosh, Steve, that that $10,000 course I took says the institutions are all buying here. There's major support. The volume has kicked up. Every indicator I follow is too oversold. You've got to buy here. This is a bottom. And look at this nice little, hammer we have here, almost a little doji. I got to buy this. Well, what happened to that? All those justifications for going long. As long as you're in the sell zone, you will have a higher level of consistency. Now, look what happened here in this past week or so. We had 1, 2, 3 closes above. Now, remember, this is why we say this is not a strategy. This is the most common mistake our newest students make is they think, well, Steve said 3 closes, so that means I buy, right? No, that means you look for buy signals in whatever strategy you're trading. Now, we had 1 close above, another close, one close below, 1 close above, and another close below. So this is the market saying, well, we're not really sure that that's enough information to tell us to go long. Remember, the more, the better. And in the introduction, I said 3 to 5 closes would be better to have 5. And as you can see, it couldn't hold, and look what happened this past week. Where Microsoft was going straight up and MANH was going straight up this past week, IRBT went straight down. So we look at each stock, each future, each currency pair individually. We're not concerned with what the overall market is. We look at each one individually. If you want to look at it that way, that's fine. But I really found no consistency in looking at things that way. All right, look, another example here. Let's look at GHDX, okay? Okay, here's a great example of how the trend changes. Now, we are below the fluid buy-sell line, so you should only be looking at the market from a seller's point of view. Now, look at right here. We have 1, 2, 3, 4, 5 closes above. That's pretty much what we look for. And as long as we don't have 5 closes below, you should be looking for buy opportunities, all right? Even though we continue to sell off and go kind of sideways to lower, we only had 1 close below, not enough to tell us to go back negative again. So this entire time, even though the market was going sideways to lower, what was the market telling you? It's telling you that the overall trend is still up. And now look what happened in the last 3 days. Obviously, some news or some event happened that caused this to gap up. Did we know anything about it? Obviously not. But look at how the market was trying to tell you to come on board. Remember, the market is your best friend. It's not something you should be fighting with. It's something you should be trying to work with, be in sync with. And it's always giving you clues as to what it wants to do. Our job is only to listen, to come on board with it. Our job is not to fight it. Once you start fighting the market, that's what puts you in that 80 percentile. And our job, our goal at Specialist Trading and Pro Trader Strategies is to get you out of that 80 percentile, okay? Let's look at one more stock here before we look at any of yours. And remember, if you have a request, just simply type it in the question and answer box and I'll punch it up. Let's look at MKTX. Same thing now. We've been above the fluid buy-sell line this entire time. Every time we had a sell-off, it was a buying opportunity. Every time we sold off, it was a buying opportunity. Every time. And now what have we had this past week? Another sell-off. All right? Should we get out of this? After all, we gapped down and we had a large sell-off in MKTX. Well, which zone are we in? What's the background color? It's blue. So you don't have to trade this, but if your strategy generated a signal, well, this is a buying opportunity. Until we have 3 to 5 closes below, you should only be looking at this from a buyer's point of view. Now, just looking at one of our strategies, let's look at strategy number 9. Apply the signal arrows, and guess what? It generated buy signals last week, and look at all the selling opportunities. Every time you got frightened and thought, well, we're rolling over, it's time to get out of this, look at the opportunities in one of our strategies generated, okay? Now, we're not here to talk about strategies today. I'm just trying to share with you how well you can do when you're in sync with the overall trend, okay? All right, now we have a couple of minutes to look at anything you're interested in having me look at. Let's see, someone's obviously wants to look at Apple, one of the most common ones. Let's look at Apple right here. I'll punch it up. We apply Apple, and we can see now that it's kind of a weird chart here because obviously we were below, and this is where you should only have been selling, but now we came back up, oscillating above and below, but now here we have 5 closes above, and we've continued to go higher. until then. Now, here's one thing I'd like to share with you. A lot of traders say, well, Steve, what about if we use a higher time frame? Well, remember, we only tell our students and suggest to our students. It's not a rule, it's not a requirement, but you should only base your decisions off the chart you're looking at. In other words, I don't look at a higher time frame in order to be in sync with the lower time frame. I know that's one of the terms, conditions of traditional wisdom, that's the way you should be in sync with the trend. Trust me, I learned that 4 decades ago, and I've never found any consistency in applying that. Now, our goal here is to educate you, but our job is not to tell you how to trade. We're just simply trying to educate you. If you feel you must use a higher time frame, go ahead. I'm not going to sit here and tell you you can't do it. But if you're asking me what I would suggest only trade the market time frame you're looking at. But having said that, let's look at a higher time frame, the weekly, all right? And guess what? We now have 5 closes above on this weekly. So both the weekly and the daily are in sync, okay? Someone's asking about Netflix, so let's go back to a daily chart. Let's just punch in Netflix. And Netflix just recently went down into the sell zone. Okay, so remember, this should only be viewed upon from a seller's point of view. Does this mean you sell Netflix at the market on Monday? No. You have to have some structure. You have to have a plan that has, some level of, organization behind it. You can't just go at the market because it's in the red zone. That's not what this tool is designed for. But it's only telling you that any setup you get should come from a seller's perspective. Now, if you want to see what the weekly time frame or the weekly aspect is, well, we only have actually 2 closes below. So this is not enough on a weekly time frame to tell us that the overall trend is down. So if you subscribe to looking at weekly and daily time frames in sync, these 2 are not in sync. So that may want to help you make your decision, okay? Now, I know some students are asking me about the currency pairs or Bitcoin I'm seeing here, or even commodities. I'm sorry, I don't have the data for Bitcoin, or I don't have the data for currency pairs. I'm only looking at the data model right now for stock, so I'm sorry about that. But remember, you can start applying this. You can look at this on your own. Just put a 50-period moving average on. This is the same thing as the 50-period moving average. The only difference is we've colored the back of the screen, but there is no difference. In fact, let me show you what the difference is. If I take the fluid off, you'll see that this is the 50-period moving average. It's still there. But it's a lot easier to see. We've just had rave reviews about this. Once you color the screen, it makes it so much easier to see. It brings everything into perspective, okay? A couple of more here. Someone's asking about UPS. Okay, let me go back to a daily chart. Here's a daily chart in UPS. Now, once again, very similar to what we looked at before. We were firstly in the sell zone, so any bounce here should have been viewed upon as a seller's point of view, okay? Now, this bounced and then went lower just for a short amount of time, but then you had multiple closes in the blue buy zone. So most likely, whatever you got short right here would have, summarized into a loss. Now, this doesn't mean you just go in the corner and lick your wounds. You have to change perspective. Now you're a buyer. So let's say your strategy gave you a buy signal. You can't just sit there and say, well, I'm not going to buy this because I was shorting for the last month or 2. How can I change? Well, you have to learn how to go back and shift into another perspective, because if you didn't, you would have missed this nice run-up we had in UPS. So obviously, this is why this person wanted me to look at this. We've, in the last 3 days, jumped up from roughly 109 all the way up to 121. Over 10 points in the last 3 days. And guess what? The market told you and gave you a warning that you were in an overall uptrend a month ago. So do you see how the market is always telling you in advance what it wants to do? The reason why we fall into that 80 percentile is because we don't listen to the market. Who are we listening to? We're listening to volume. We're listening to some guy in a chat room. We're listening to some so-called guru on TV or some so-called guru on a webinar. We're listening to the institutions. These things have no higher level of consistency than someone who's been trading for a couple of weeks or a month. Trust me, I followed all of these things 4 decades ago and they couldn't help me. It wasn't until I started learning how to listen to the market that trading started to become consistent. So this is all I'm trying to teach all of you. Learn to listen to the market and see yourself fall out of that 80 percentile, okay? Now, let's go back to the presentation. Remember, we share with you these things strictly for educational purposes only. Now, as we conclude here, remember, the market, not some guy in a chat room, not some convoluted indicator, not some Fibonacci support or resistance level, but the market is always telling you what it wants to do. Your only job as a trader is simple, to listen to it and then jump on board. Not to fight it, not to bet against it, not to pick a top or a bottom, but simply to be in sync with it. Okay, let's recap before we go into question and answer. Remember, always apply the buy-sell line on your chart. I don't care if you trade a 5-minute chart. I don't care if you trade a monthly chart. I don't care if you look at currency pairs. I don't care if you look at Bitcoin. You should have a 50-period moving average always plotted on your chart. And then the buy-sell line is just the 50-period. Now, if you have our platform, there are different ways in which to view that 50-period. The fluid buy-sell line, we have a background feature, we have a ribbon feature. There's different ways in which to apply it. Whatever way you choose, you must always ask yourself a question before you pull the trigger, before you enter into a trade. Always ask yourself, where is price? Where is the current price in relation to that buy-sell line? And that will eliminate half your choices. That's half the battle right there, because it's putting you in sync with what the overall trend is. All right, we have a great discount for all of you attendees today. Thanks for taking time out of your Saturday morning to come to this educational classroom. We're going to offer you the PTS Primo charts. This is the educational platform that actually teaches you how to be on the right side of the market. I just shared with you in real time how simple it is to be in sync with the overall trend. We're going to offer you 30 days for only $7. I see a lot of current students and a lot of current members already in this class today that have taken that offer. But remember, this is for 30 days only. Let me share with you what we're also giving you on this great, amazing offer. Not only will you get the different features with the buy-sell line, you're going to get up to 4 different features and ways in which to apply it. You're also getting our top-bottom 25% feature. This is a way to determine the short-term trend by looking at a specific pattern. Now, all you have to do, once again, is click on the top-bottom 25% feature, and you'll see this pattern on every chart, on every time frame, okay? We're also giving you a strength of trend feature. I designed this with Pro Trader Strategies that will give you an early warning as to when a trend may be running out of gas. This is a great, great feature we've designed ourselves. You'll find nowhere else except on the PTS Primo Charting platform. We also provide you with a scanner. You can scan for buy-sell line. Every night you'll be able to see the stocks that closed above or below the 50-period moving average. You also get 90 of the most prominent technical indicators, but we know we have a technician's bias on the platform, so we're also offering free Bloomberg TV. This is a great offer. All you have to do is click on the media icon on our platform, and you'll see our media page appear. Okay, this will appear on your charts. You can minimize it to have it on your charts while you're looking at a chart or doing some research, and you'll see live news as from Bloomberg TV as it's being reported. Any education, any indicator, any announcement will be there live on our media page. And then lastly, this all comes with great tech support. We have rave reviews coming around the world about our tech support, about how most of the issues are solved in just a small matter of time. And so we are always there to help you resolve any issue. This is all going to be yours, our platform. Over 40 years of things I've accumulated, things I currently use in my own trading, one click away. This is the educational portal, once again, that teaches you how to be on the right side of the market and more. Remember, 30 days for only $7. At the end of 30 days, you can decide for yourself whether you want to continue or not. This is a tremendous offer. Once again, over 4 decades of information, education in one platform, and it's all easy accessible by clicking one thing, and you'll see it appear right in front of you. So here's how to take advantage. I designed the platform with Pro Trader Strategies. You can email them or call them directly at area code 310-598-6677. If you have any questions, you can call them directly, or if you want to go to the sign-up page, that link you see at the very bottom is the link that will take you to the sign-up page and more information on our $7 trial. It's not a live link, but if you look on the chat box on the GoToWebinar column on the far right, you'll see that a live link has been posted. So you don't have to copy and paste that on your screen right now. You can just click on that live link on the chat box, okay? I'm going to leave all this information up here. And remember, you can ask me any question you like right now. Just go to your question and answer box. But remember, this offer is just good for a limited time only for $7. So please take advantage of this, okay? $7 to get over 4 decades of information, of knowledge in one platform. I can't think of a better way to become acquainted with us at Pro Trader Strategies and Specialist Trading, okay? Someone is asking, does it work on the MT4 platform? Well, I'm not sure what you're asking, what works, Joseph. When you say, does it work, remember, we have our own platform. The platform can't be infused with MT4. If you're asking, can you apply a 50-period moving average? Remember, we don't supply you with the fluid buy-sell line that you can apply on the MT4. You can only apply that on our platform. But most traders, myself included, I use a different platform to enter orders on. Remember, the PTS Primo Charting platform is not an order entry platform. It's simply an educational platform. So I toggle back and forth between seeing these setups and then entering my orders. So that's the way the majority of our students around the world use it. So if you are looking at, let's say, the dollar yen, and you see that you have on an intraday basis 5 closes below the fluid buy-sell line, well, then toggle back and forth onto MT4 and then look for a setup. That's how simple it is, okay? Someone is asking, can this work on weekly charts? Yes, it can. I showed you some weekly charts. If you came in later, you didn't see that. Remember, this can be applied, as with most of our studies, on any time frame, any direction, and any market. That's the beauty of this. This education can be transferred. So you don't have to feel like, well, this is only good for currency pairs. I'm a stock trader, or I trade E-mini futures. I guess it doesn't work for me. This works for everything. I trade it with E-mini futures. I also apply it to stocks, to currency pairs, even to commodities. So don't worry. In fact, if you look on our older, I believe going back to May, on our Twitter page, using this tool, I showed a lot of chances and how you could have gotten long Bitcoin, and simply by knowing that the Bitcoin daily chart had crossed over onto the fluid buy-sell line buy zone. So there's lots of great ways to use this, okay? I can't think of a better way. $7 by getting acquainted with you. Remember, you're getting over 4 decades of information. $7, if you went out to buy a couple of cups of coffee this morning, it cost you way more than that. Well, you're getting a full month's worth of education, okay? So as we close here, I hope you got some great education. I hope this convinces you to come on board with us. I really hope you become a student of mine. But as you take one last look at our disclaimer, I look forward to all of you becoming students of mine, but members of the PTS Charting platform, okay? Thank you so much for attending. I'll see you next time. Have a great day. Bye-bye.